Good morning, ladies and gentlemen, and welcome to the Financial Juice News morning briefing with your host, Tony. So let's start off the day by looking at the main bit of news. OPEC and allies agree to historic output production cut. So from the NBC article, this was done on a Sunday, by the way, with the production cut. So from the NBC article, it says oil prices moved higher early on Monday morning, stateside after OPEC and its allies agreed to cut production by 9.7 million barrels per day. The deal was finalized Sunday after marathon discussions that spanned 4 days, is the single largest output cut in history. So this is going to provide some form of short-term relief to the markets. Now, you did have some issues with Mexico looking to cut 100,000 barrels per day. That was down from 400,000 barrels per day. Then you had the US coming in saying, look, we'll cover the cuts that you're not able to cut, and we'll help oil stabilize oil in the markets. Now, if we were to take a look at the reaction from the markets themselves, this is WTI crude oil. This is where we saw, of course, on the open, it did open up higher, and then it quickly moved back towards the downside. Now, one of the reasons why it's moved towards the downside is because, one, the sentiment it's provided that basic sentiment or a little bit of stability in the markets. We haven't pushed down any further than $20 as of yet, and that's we did kind of try and get close towards that on last night's open. But as you can see, markets are holding at the moment, so we'll potentially look for any upside movement. But again, be cautious of any continuation of selling, and we'll discuss that in a bit further, a bit more detail. So that's the first article that was done. And let's have a look at the next article here from Reuters. Okay, let's scrub that up. So Goldman Sachs sees crude prices falling after OPEC Plus deal. Now, from this article here, it says that the bank saw downside risks to its short-term oil price forecast of around $20 per barrel for Brent, but projected the global crude benchmark would outperform US oil because OPEC Plus producers' exports will likely fall, freeing up floating storage. So this is what I was talking about, where you see the initial positive market reaction, not only in oil futures, but also if I bring up, let's have a look here. Also in US futures, so I'll just bring that up for us to see here as well. So the positive reaction in US futures, and then a movement back towards a sharp decline back towards the downside. The reason why we're not seeing continuation of a movement towards the upside, or one of the reasonings ideas that I have, is that there is still this huge oil glut that we have, okay, within the world. World production of oil is at 100 million barrels a day, and consumption is at 90 million barrels per day. They're looking to cut 9.7 million barrels between May to June, which, okay, it's a big cut, but it's too late. And the reason why it's too late is because countries have already effectively gone into lockdown and people are not going out. Businesses are closing and staying shut, and not wanting to lose money on producing goods and not being able to sell them, as there is no one meeting the demand rate that they would want, particularly oil producers as well. So again, I see it as this cut is not my tempo. It's too late, too little, too late. And then they're going to look to phase that number out of oil output cuts through till 2022. Again, it is slow, but this is something that is a bit positive, but it's not entirely positive. As I said, there needs to be some extreme continuation of these drastic cuts in order to suffice the markets. Now, to Goldman Sachs, they say a bigger output cut by G20 nations would also not help much. It said, ultimately, this simply reflects that no voluntary cuts could be large enough to offset the 19 million barrel per day average of April to May demand loss due to the coronavirus. So that's the big key thing there, is that, as I said, there's this huge glut, and it's not gonna cut it enough. So again, April, May oil prices are likely to remain low. WTI crude oil prices are likely to remain low within the short term, but there will be a gradual rebound as demand slowly picks up after governments open up their lockdown and ease social distancing measures as well, and also importing and exporting goods to other nations. So if we have a look at some other articles, so from the Straits Times article, bring that up for you. Okay, so what it says here. So from the title, how oil demand has fallen around the world. So let's get an understanding of where we sit at the moment. So the US's oil demand, where we sit, has now fallen to 14.4 million barrels per day, which is the lowest bit of data coming out since 1990, with a drop of more than 30% from pre-crisis levels. And government's figures showed this last Wednesday. The short-term outlook, the EIA, or the Energy Information Administration, forecast the hit to oil demand will be 16.7 million barrels per day this month. So if the US is looking, or is cutting around 350,000, and then the extra 100,000 to offset Mexico, or the extra 250,000 to offset Mexico as well, then it doesn't really present. If oil glut is going to be this high for this month, it does, as I said, it seemed too little, too late. So this is we're just going to keep on the back of our mind. As I said, oil prices, WTI crude oil prices, do expect it to remain low for the next couple of months or so until the US decides to bring itself back out of this coronavirus lockdown. There is no official countrywide lockdown, but most states are already in quarantine. Okay, so other oil consumers as well. India, crude demand of the world's third biggest consumer, has collapsed by as much as 70% as India endures the plant's largest national lockdown, according to officials at Indian refiners. Consumption for the entire month could average about 50% below last year's level. That is based on India's 3-week lockdown ending on April 15th as planned. And that is 3.1 million barrels per day of lost oil demand. Again, this is adding to the oil glut. This is just to understand where we sit with figures. China. So India is the third largest consumer of crude oil. Now, if we look at China, their oil refineries, the world's biggest crude importer, may increase processing rates to near last year average levels this month, providing a glimmer of hope. So everything's picking back up in China slowly. And they're hoping that if they start to produce a bit more oil, which isn't a good idea. I mean, if you've got a lot of oil out there and demand is low and prices are cheap, so why don't you go to those other nations that are providing that oil so cheaply, and just instead of increasing processing rates to near to last year's levels this month. which is okay. If we're thinking about how China's plants have been shut down and nobody's been able to go back to work, that's a positive sign. But I think it's not. I don't see it as the right move here to start ramping up oil production again. This is going to add to the glut, and there's going to be a need to extend potentially those cuts through 2020, through 2022. So again, is it the right time to open up processing plants for oil? I don't see that as a good case scenario for the short term future. I'd say wait it out, use the oil that's in supply globally at a cheap price. Get other industries and factories back up and running as needed and where possible and where it makes sense, such as industrial production, and just use the oil up that the world has provided. So other than Spain and the UK, so the UK, sale of petrol and diesel in the UK were down 66% and 57% respectively as of March 31st. Of course, you had the UK going into lockdown themselves. Okay, let's have a look at another article as well. Okay. So, talking about China, let's have a look at the next article here. So, from the Washington Post, they say China reports the highest number of new coronavirus cases in 6 weeks, and the US weighs risk of May the 1st restart. Now, in China, there have been 108 new cases. I'll just bring up that chart for you guys to look at, make it easier for you to see what I'm looking at. So, 108 new cases of coronavirus in China and 2 new deaths so far. That as I explained in earlier videos last week, that you're going to see a roller coaster effect in the amount of coronavirus cases, the mortality rate as well. So we have seen our initial high of coronavirus cases, and now we're going to go into a second phase or second wave of coronavirus cases and this rebound. So we're going to see a roller coaster effect in the markets as well. So at the moment, if we have a look at the dollar where we sit, so this safe haven currency, what happened is that so last week we got positive news that the amount of coronavirus cases was decreasing or plateauing in Europe, and we were seeing some positive figures coming out from there, or much better figures coming out from Europe. We saw the move away from the dollar back to other currencies or national currencies. So again, dollar not king at the moment for now. There's a bit of a pullback. What we're likely to see is, well, one interesting thing that I do want to show you on the dollar, and I just showed it to you on a basic area here. So let's talk about market tops. So we've got a market top here as our roof, right? This is our steeple, or this is our house, okay, on the dollar. Now, if we have a look, now usually this scenario here represents a bear market where you have a new lower high on the dollar. That's a potential scenario. And then what you usually see, if you're talking about reactions in the market, what you can potentially see is a movement towards so you see this initial movement back towards the upside, and then it tries to test this area or the previous high, and then it moves back towards the downside on the dollar. Now that is something that you can't deny, is what we can see. So that's a potential. That's a case that could happen, where we do see, actually, if I draw that a little bit better, I'll just see more of a realistic view. So here we go. So yeah, so as I said, you've got this new lower high. You see a continuation of a downward movement, and then you could see a little bit of a rebound, but then you'll be in a bear market rally, and things will just continue to go down and just go down and go down until at some point it'll hit rock bottom, and then you'll see a market bottom, or the inverse of all of this. See the inverse of that. And then we'll see a movement back towards the upside. So that's something just to keep in the back of your mind of where we sit on the dollar, just as the global safe haven king, or dollar being king, the currency of the world. That's where you just got to kind of keep in the back of your mind. Just be careful of where we sit at the moment on the Dixie as well. Okay, so going back to some of the news as well, I just wanted to finish that off with you guys. So as I said, there's been a rebound in the number of cases, coronavirus cases within China. As I said, that's going to continue, and we're going to continue to see more of a rebound in Europe as well. That's a given. So don't think it's going to be all fine and dandy. Okay, let's go back to other articles as well. Right. So some negative comments coming out from Fed's Kashkari, who is a voting member, is regarded as dovish as well in his monetary policy outlook. That's quite an off-putting image right there of Kashkari. Kind of tells you how you feel when you see the U.S. economy on the verge of collapse. As a side note. Anyway, jokes aside, Kashkari said on Sunday that he expects the path to economic recovery from coronavirus pandemic will be a long and hard road. So what he specifically says is that it could be a long and hard road that we have ahead of us until we get to either an effective therapy or vaccine. It's hard to see a V-shaped recovery under that scenario, Kashkari said. Now, that makes sense, of course, going back to the charts of what I've showed you. That V-shaped recovery doesn't look too optimistic. It's not an optimistic scenario. As I said, that's where we sit. Now, Kashkari, already we've reported from the Labor Department, 6.6 million Americans filing for unemployment. That's a given. That's something that is expected. But Kashkari's views of us not being in a V-shaped recovery is worrying. So from this article, he was part of the Troubled Asset Relief Program in 2008 crisis. And he says that the expectations for a sharp, speedy recovery seems to be optimistic again. Dovish comment here, very, 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 very dovish. He's on the far end of the spectrum. Kashkari is. So again, is he overdoing it? Possibly, being very negative here about the US's outlook. But realistically, for a couple of months or so, we are going to see continuation of turbulence, some switching in and out of one from the dollar currency being king, and then people moving the money back to their own currencies. We're just going to see this continuation of a roller coaster effect within the markets. So Kashkari making his comments here about us not being on a V-shaped recovery path as of yet. That doesn't really put us in a strong footing. That's the hand that we dealt with. But the only thing that can be taken from this is just taking strong social distancing measures. Going back to the previous article that I showed you about the US looking to restart the nation, or looking to restart the nation May the 1st. Now, you've got China that's taken two or 3 months to restart. Okay, that's very hopeful. Very, very hopeful. If you're if you're in the Trump administration, that is. But if you're Dr. Fauci, then Fauci is saying that on Sunday, the early efforts to mitigate the spread of novel coronavirus could have saved lives, but there was a lot of initial pushback about shutting things down. Basically saying that the US reacted too late, or too little too late, or not enough to keep the US protected as much as it could have. It just shows the issues in the administration at the moment. But May the 1st, Trump tried to get the economy back up and open on April the 12th, or yesterday, Easter Sunday. So I hope you had a good Easter Sunday yesterday. But that was pushback, and Trump must have been shown a graph of where we sit, or where we could be in the US if there were no social distancing measures and we reopened the economy, and then where we would be if we didn't reopen the economy. So he must have taken on that advice and just understood, okay, fine, we'll keep social distancing measures until the end of the month. But again, I don't see the US coming back out of this coronavirus issue that we have. If we're expecting, or if they're expecting, at least 60,000 deaths within the US, according to Dr. Fauci. So again, just keep that in the back of your mind. I think my sort of prediction would be around August is when the US will start to come back online properly, or start to show a bit of a recovery from coronavirus, and a little bit of pickup back in manufacturing. Again, maybe August or July, August. That's more realistic for the US to start opening up their factories. It is a pessimistic outlook, but from my point of view, it's more realistic. If you're seeing a rebound in numbers from China, and they've been in effectively quarantine for 2 months, that's again going to cause them to shut down factories and close everything off again. So realistically, you keep everything closed for a good solid 3 to 4 months. It's going to have a negative effect. That's a given, but you're going to not only save lives, but when you do start to reopen the economy, you're not going to see such a huge rebound in the number of coronavirus cases. That's my point of view there. Okay, that is the market morning briefing. Thank you for joining me. Don't forget, 7:15 a.m. Eastern Time, I am on every morning, Monday to Friday. And don't forget to like, share, and subscribe to our YouTube channel, which is something that I'll bring up for you guys, just to keep in the back of your mind. So yeah, so don't forget to subscribe to our YouTube channel. Check out the Financial Juice news stream as well. We do provide live, free voice and text headline updates, which are near real time. And we'll see you shortly. Thank you very much.